Just a couple of other things about levels and made it really stop losses more than anything else, because there's two things. When there are, as I said, when you're in a range, when a market is in a range, it can be very frustrating. You're going to get a lot of choppy price action and whipsawing but also trading opportunities, maybe short-term, very short-term trading opportunities. And this is where your levels come in, more importantly, for setting your stop loss. And when you have, say, something like the volume point of control here, so if we just take, say, this move that started from here, from the VPOC, well, the advantage of having such a strong level as the volume point of control, because don't forget, we've got price-based support, but we've also got volume-based support, and that is that they immediately tell you where you should place your stop. You place it just below, so that if it does go against you, and you can see here the number of times there was a break there, then it failed, it came back, well, your stop would be about there. So when you are in these ranging markets, you have to expect to be stopped out a little bit more often than if the daily chart was, say, in a range, in a trend, if you like, in a strong trend. And there are plenty of forex pairs that are in a trend at the moment on the daily chart. But that doesn't matter, because the whole point is, even if you are stopped out on more than one occasion, when you do catch a move, it will be a very strong move, and you will still only have used a very tight stop. So if you look at it more closely on the Renko chart here, we see the move away, which is approximately where the VPOC is on that chart. We've moved higher. We know we've hit some important resistance levels on the camarilla, and whatever you use to mark out these significant levels. As we can see here, this is on the hourly, and we know that's going to stop there by virtue of the fact, okay, it's the R3. That's one reason, but there's also a more compelling reason, in as much that it's already been it's reversed from here on this occasion here. This occasion it did actually break through, but support and resistance levels, you do have to give them a little bit of room to breathe, as it were, and that is generally a failure. And you would look at the volume below that price action, because that would also determine whether that's going to go through. When a price reaches a significant level, to get through that level, it needs volume, and if there's no volume there, you kind of know there's the price-based resistance, there isn't enough fuel to take it through, it is actually going to reverse. And what it did there, when it hit it first there, in fact, if you go right back, you can see here the number of times this has acted as resistance. Now, unlike the Ninja Trader, the support and resistance indicator for MT4, MT5 is much more, it's a much more simple indicator. All you have is you either have a thicker line, as we see here, or you have a hatch line. It's the MetaQuote's language isn't sophisticated enough to be able to develop the indicator as we have done for Ninja, whereby the number of times, the equivalent resistance line on the Ninja Trader chart, that would, every time that would hit, that line would get thicker and thicker. So you know, as a trader, that if you're approaching such a point on the chart, you know it is going to pause. Is it going to pause sufficiently for you to be able to take a reversal trade? Well, it depends on your time horizon. As we can see here, it does look as though it has it has produced the bright red and the red and the red. We had this intermediate color here. When I said bright red and bright red, that's if you want to be slightly more conservative, but you can use this in any way you choose. You could say, well, actually, I'm going to be a little bit more aggressive. I'm not actually going to wait until that's bright red. You can, your entry points are very much up to you. But I always say I prefer to be bright red and bright red. But I know I'm in a range. I know I'm at this resistance level. It looks like it's possibly going to have another run up there. Look at this candle before. There's obviously buying under that candle there. So we'll see what happens if we go down to the 3 minutes. See what happens on the 3 minute chart. Again, it's around this level here. I said if it's going to go down, it's going to go down to the R4. There's quite a big distance there between that level and that level, but you know it's not going to go down in a straight line. Why? Because down on the hourly chart, it's in quite a narrow range, and it is actually moving sideways. But you can also use these levels to place your stops. You use them as a price objective, but also for stops. Similarly, on the NinjaTrader platform, and the advantage, as I said, of the NinjaTrader platform, the lines get thicker the more times that that price level is hit. So if you do place a stop beneath, if you're going long, beneath one of these very thick lines, and you've also got the VPOT, you have the comfort of knowing that if price is going to come down to there, it is at least going to pause and give you time to decide whether, you know what, am I going to stay in this to sit there and wait and see what happens? You know, because it may just be a retest before it goes higher. Is that okay? Do you want to? Absolutely. That's fine. So I should have. So really, we talk about these levels, but you also use them to help you with your trade. First of all, with your stop placement and the management of your trade.